Trading is a game of patience, skill, and execution. But what happens when a very good setup appears? Today I'll break down 2 trades in crude oil. It is called US oil. I'm going to break down 2 trades in crude oil, and these are opportunities that happen to change my life in trading. They happen to shift my trading journey from something that was to something that is really amazing.
Wow.
We are going to dive deep into these 2 trades, and I'll show you my entry strategy, my risk management, and the key lessons I did learn while trading these setups in crude oil.
Yes, sir.
You need to learn as a trader. If you're tired of making losses, if you're tired of taking too many trades and then crying, stick around. We are going to learn together how I managed to get these 2 trades entries. You don't need too much trades. You just need these 2 trades, and it could change the way you trade and the way you look at the market forever. So stick around, hit the like button, and follow for the value I'm going to offer to you. Before I entered these trades, I had to understand the bigger picture of crude oil, where the market was going. And the main analysis I did here, I first drew this trend line. You can see crude oil was on an upward trend for a while, and this enabled me draw this trend line that you see right here. What does this mean? It means it is on an upward trend, and the crude oil, this is the US oil, those of you that don't get it. So it got me thinking where my analysis was taking me, because that day we were around here. I was very determined that if it comes back and crosses this trend line, it is going to drop, and it would be a drastic drop. As you can see, crude oil this day came back and it dropped here. After it crossing my trend line, that is when I entered the trade. I put a stop loss that was very, very tight. I was like, this is a Monday. Let me put a tight stop loss. Let us see what happens. When I entered the trade, I entered it on a 15-minute time frame, but I had observed the trade all the way from a 4-hour time frame, 1-day time frame, 4-hour time frame. You can see the trade here. I was very observant. I was like, if it crosses, we are good. So I entered the trade on the 15-minute time frame, which was the main point of my decision, right? This is the first trade we took. So what we did, we entered the trade here, and of course we went into profit immediately.
Yes, sir.
We didn't go in drawdown for a while until the trade was halfway our take profit. Then it decided to reverse a little bit. It reversed, not a little bit, it did reverse a lot. As you can see right here, it came back to break even. What most traders would have done at that point is they would have gone out of the trade. But I was patient. I stayed patient. I knew I had done very good analysis for my trades. So I stayed patient, and I was like, I'm going to wait this trade out. And you know what it did? It came back. As you can see, I had marked this support, it's not support, it's resistance. This resistance level up here, and there was support down here, but I didn't pay too much attention to the support. And when the trade came back to break even, I was like, I'm not leaving it. Let it take me out if it wants to. Let it hit my stop loss. But lucky enough, the trade came back until take profit. As you can see, where we took profit, it is almost a resistance level right here where we took our profit from. It is a resistance level, and that is where we went out from. But the market continued to go down. Mind you, these key levels are coming back to help us later. The best thing to do is to mark them. If you're a beginner in trading oil, you have to mark these key levels. So I got out here, and of course the market continued down. If we had stayed in, we would have racked even more profits. Therefore, I have not marked it yet, but I'll mark it for you right now. This is a key level right here. It was acting as support, but the market broke through it and it continued on a downward trend, as you can see right here. So what we did, we brought this back up. As you can see, this is a very, very important level. If you draw the line here, crossed by this and this, and it is respected because price is bouncing back off it. So we were like, this price is going to bounce back off this level. Our first trade is done profits in the bag. A Friday, then this is a Monday, this is a Tuesday, right? The weekend passed and we were like, okay, that is nice. So Monday came and we had an important decision to do. We were like, this level is quite important. We thought market is going to bounce off this, and we were like, maybe it was even going to go up above this level. But I was like, it is a Monday and I'm not going to be greedy, right? So we entered the market at around this level and put a good stop loss. It is not too tight like we did in this trade, because I learned my lesson. You don't have to put very tight stop losses. This trade, we decided to do risk 1 to 2.5. It was enough for me. So we were confident that price was playing around this place and it was going to bounce back off. So we entered this trade, and of course we waited. It was going in our direction. Monday finished and we didn't hit our take profit. So we had put the take profit above this level of resistance, a little bit above it, because I thought it was going up. I was not ready to take, this full profit. So what I did, I put it a little above this level of resistance that you see here, because it was supposed to be our resistance. This was support and this was resistance, right? But price broke through. So we said we are going to put it at this level of resistance. But remember, when price breaks through that level, now this becomes support. This is the decision I made on why the price would not go above it, right? This becomes support. It becomes support, guys. You have to learn this. Support and resistance, supply and demand. These are key levels in trading, and you have to be very, very careful when you're trading around such zones, because someone else would have decided, oh, I'm going to stay in because probably we are going to go back here. I tell you what. So these levels are always important. You see this level here, right here, that you see where we entered from. As you can see, even when price comes back, it tries to reject it until it breaks through. This is a level. This is also a level, right? You'll have plenty of levels in trading, but this is US oil. Some of you can call it crude oil. As you can see, this is WTI, crude oil. So we were still analyzing these trades and what went down during this period. We decided not to be greedy. We saw this level of resistance might be tough. And definitely it was. It was tough, because a trader doesn't need a lot of trades actually. This is advice to you guys. You do not have to trade like 20 trades a day. No, it doesn't work that way. Just place 2 trades. If they work out, if you see your setup, that is what should give you the best confidence. If your setup ticks all the boxes, you should have a box of 10 ticks you could tick, right? Okay, it has broken the trend line. Where am I going to put my stop loss and why? Where is the take profit going to be? Is it a level of resistance? And if the price does this at this point, it is a full process of getting into a trade. What I did here, I put 2 trades each. You put 2 trades and settle down. If you have $100 account, you can risk $10 to make 30 or 40. That is a risk of 1 to 4. Yeah, you risk $10 to make 40 or to make 30. A risk of 1 to 4. You could be lucky, like this one I made, this trade, I risked, it was like 1 to 10. As you can see, the first one, this risk is like 1 to 10. Realistically, I would have put the stop loss a bit above that, but I did not. But if you have an account of $100, you risk 10 to make 40. It is understandable. You risk 10 to make 20 or 30, around that. 1 to 2, 1 to 3, 1 to 4. That is how it should be. But here I was able to stay into that trade, because if it was 1 to 2 or 1 to 3 to 4, I would have gone out here. My take profit would have been hit around here. But it was like 1 to 10, this trade. So in this next one I learned, I'm like, I need to calm down. I need to do a risk to reward ratio. So I did 1 to This is like 2.503. I didn't calculate it in baby pips, but you can see the picture. You just get this and put it over here. It is like 1 to 3. So it hit, and of course I thought the market had broken through my resistance, my support, because resistance becomes support. I thought it had broken through the support and it was going above, but it did not. When the London session happened, it broke into the downward trend. As you can see these trend lines, and I also considered it has broken my trend line. I thought it was oil to the moon, but it was not. The market moves in different ways. We just have to follow along, right? It broke through this support level, and again it came back down. It was a fake out. Some people call it a fake out, others call it something. It broke out again, and of course when it breaks back, this one now becomes support. As you can see, it is playing around my downward trend. So there is no way I could have entered here. I just observed the market, and of course it did its thing in the New York session. So guys, both these trades made me something, and they changed the way I look at the market. This is crude oil. We shall analyze other instruments, but this is crude oil for you, US oil. It was a good 2 trades, and each I entered 2 positions. I did not enter like 5 positions. I would have made much more if I entered 5, but I took 2 because that is like my trading rules. Just do 2. Don't flip. Most of the people try to flip and they end up losing a lot of money, end up losing a lot of potential, and call trading a scam. But for me, I do 2. If I see a very good setup, I do 2, and I'm patient, so I wait. Anyway, we shall keep on looking for more trades like this that are winning trades. If we make the losses, I'll also bring them on screen on this YouTube channel so that you're able to see them. So thank you for watching this video. We are traders, and we do our best to harvest profits in the market to get whatever we deserve. You don't deserve anything from the market. The market is not but we try our level best to be careful, preserve our capital, which is the main goal on this channel. You have to preserve your capital, and you have to trade responsibly. If you enjoyed this video and more videos that I make, please make sure you leave a like, leave a thumbs up, and leave a comment. Let me know how you trade. Those of you that don't trade oil, is it something you consider? Those of you that trade gold, oil is a bit more stable than gold, because if you look at the gold structure right now, it moves way harder than the way oil does. You see all this side movement, but it was moving from support, resistance, support, like that. Anyway, those are the trades for crude oil. Thank you very much, guys, that have been able to follow along our journey as we improve with trading, as we do our best with trading. I want to remind you something. Make sure you first subscribe. But traders out there, I want to remind you that trading is a marathon. It's not a sprint. You have to go slow, preserve your capital, and do your level best to trade the way you can. Find signals that are very relevant. Use trend lines, support and resistance, other signals that you can use. Make sure you do that, and stay safe, stay blessed. I'll see you in the next one. Peace out. Bye.